on that. Let's address some more corporates then. Allcargo Logistics earlier told us that the China lockdowns led to muted volumes and hit their Q4 performance. Now with the lockdowns easing significantly, we assess the extent of the damage. V.S. Parthasarathy, Vice Chairman of the company, is now joining us. Mr. Parthasarathy, hi, good morning. Thanks a lot for joining us. So first question on that, now with the lockdown situation easing in China and in fact, Shanghai declaring victory over COVID, have things started to turn a bit?
Yeah, so basically, yes, you're absolutely right that China opening up leads very well for the overall globe trade. Along with it, US in February actually saw a very high demand growth. And the implications of that is still continuing. So that also gives a surge to trade. So overall, yes, it is looking good at this point in time. For overall full year 22 also, I think the growth opportunities remain moderate.
Okay, growth opportunities remain moderate. Mr. Parthasarathy, good morning. This is Sonia here. All commercial vehicle players and financiers have spoken of a pickup in the freight rates. And of course, this is one space that you have been a part of for decades. So just wanted to ask you, what's your view here? Have you seen a genuine pickup as far as demand is concerned? And what kind of growth are you looking at for the logistics industry compared to the overall industry? I mean, your own growth versus the overall industry, what could it be?
Yeah, good. Okay. So thank you and happy to be here with you, Sonia. It's been some time. The key thing is that from a price rise point of view and rates, that's one part of your question, and volume is the other part, and then Allcargo versus industry. So global trade has witnessed a number of price hike in the last couple of years and a few rate cuts, okay, more towards the tapering towards the end, but it's at elevated level. The increase in US container import volume in Feb 22 has put pressure on the global supply chain. That's another one to keep in mind. The third one is the China opening up and now container volumes picking up, especially on the victory declaration on COVID and more ports opening up. So from a rate point of view, container freight rates will remain high most of 2022 due to persistent disruptions. While the China maybe some part may resolve, some part remaining, the geopolitical situation remains still a concern. So there is persistent disruptions which are happening. So we see rates to be elevated for 22. And the opportunity for players, and especially players like us, is creating opportunity in this uncertain environment and give some certainty to our customers. So that's what the focus is on. By coming back, rates will tend to be elevated and remain at that, though increased rates, more increase is not what I am foreseeing. But on the volume front, there are two countermeasures. One is US, will cool off a little bit, and China will open up a little bit. So these two will contract. So that's why I said growth will be moderate. However, when it comes to Allcargo, there is a lot of effort which is taken in the previous years and mainly previous year, where both organic and inorganic efforts were taken. We, acquired Nordicon in the international, Speedy in the domestic area, did a JV in South Korea. So all of them contributed to last year's result, but the full impact and the growth there, prospects and the synergy prospects put a lot of positive impact, both on the top line and bottom line for Allcargo. So we will outgrow, hopefully, the industry, both on top line and bottom line.
Okay, all right. Hi, Mr. Parthasarathy. Going by the details that you're given us, the multimodal business, that's bulk of your business. It delivered a revenue of close to 5,000 crores on a quarterly basis for the past quarter. That sort of a run rate is sustainable. Can it be much better than that? Because, freight costs are much higher, as you said. And also volumes are likely to pick up from here on.
Yeah. So two, one is that 5,000 crores, which you're saying, which is the MTO.
Yes.
And the global LCL and FCL business as we define it. Yes, there is robust demand, and therefore the kind of growth should continue. How much we grow on will depend on these two factors that I talked. How do the various multimodal pick up. For example, the conflict in Europe, the railroad operations around that is constrained. So that will be a negative. The rerouting will be the positive. So these are forces which will act. So to answer your question simply, yes, A, it should be sustainable, and B, yes, we should see growth.
So, if you can just help us with some numbers, you're sitting on a base of around 20,000 crores in terms of revenues for the full year. Just trying to understand what could the growth be in numbers, 10%, 15% on the top line for FY23.
आपके मुंह में घी शक्कर, so as much as we can, but our own perspective is that a double-digit growth is not off the cards. So clearly we should be able to see based on both our organic and inorganic attempts that I'm talking about. So I hope that gives you some comfort without predicting the future.
So when you say inorganic attempts, have you narrowed down on any acquisition? Because you've done 7 acquisitions in the last 11 years, and the last one was in July of 2021, so not too long ago. Anything that we can expect in this calendar year itself?
Yeah, so when I was referring to inorganic, I was referring to 2 specifically, 3 in fact. One is Nordicon, which we acquired beginning of last year, 21-22. So maybe the date you quoted is right, and Speedy, which we did in India on our CL space. So both of them should feed to both the top line and bottom line, and the joint venture in Korea. So these were what I was talking about. You are asking me to predict the future. M&A is, I've learned, and you talked about my decade of experience in this, that M&A happens when it happens. So are we looking at some things? Yes, certainly we are looking at, and what will come to fruition, I hope some do. But yes, this is the space which we'll be watching, but we will make our plans on organic and be open to inorganic opportunities.
Okay, very quickly, Mr. Parthasarathy, you all had some non-core assets as well, the group, whether it's a small entity, Gati as well out there, which all were clearing up. Any more non-core assets that you're looking to sell? And also, if you could give us an update, how's your balance sheet looking as of now?
Okay. So two very important. So what we said is many of the assets that we got, which were non-core in that sense. For example, a petrol pump business or some other things that we were doing. We have most of them is cleaned up. A small portion remains, and it is on lookout for proper deals. We don't want to do a fire sale, but that is clearly earmarked for sale. So when we do that, we are broadly done. Okay, there is some business on what we call as an equipment business. We had larger number of cranes and other equipments, and our utilization was in the 50s. Now, after disposing of what we had to dispose, the utilization has gone upward of 90. So we are not worried on that front. So that's what it is done. So clearly cleanup is done, and not much more expected. From a balance sheet point of view, you're probably asking about debt. The debt remains very much in control, and maybe about in a percentage or in a ratio terms 0.4, but in terms of absolute term, maybe about 1,800 crores of debt.
Okay, Mr. Parthasarathy, we will leave it there today. Thanks a lot for joining us, and good luck. That's V.S. Parthasarathy from Allcargo. Let's talk about the stock of this year, ITC.